The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Friday today, of course, our last day of the week, shortened week, but it's the last day of the week. It's the first full week that we've had after the August highs, and now in some cases they weren't highs, but the candles that were formed for the monthly charts, some have not gone above the August high, and that says watch out because September could see a peak of sorts in the monthly charts. I had a call yesterday, I think it was yesterday, maybe the day before, from John in Philly. He was talking about the 200-period moving average. I showed that earlier this morning in the den. Look at that blue line, the thick blue line. This is the 10-minute E-mini. Look how it was basically support right up until that final peak D in the Chapman wave at about 4 o'clock at the close on the 4th of September. And then all of a sudden it became resistance, resistance, resistance. Even though you broke slightly above it, still resistance. Today we went above it, and at 2877.75, we are in fact, if I can just hit that button there, right there. We are, in fact, just right on that blue line, maybe a tad under it, the 200-period exponential moving average. That's really key. And I'm looking at this and I'm saying, so we've got to maintain our strict structure of looking at the chart formations as well as the Chapman wave notation. So now let me go through this because this is Friday. What we're seeing now is probably close to what we'll see near the close. So let's go through this. The Dow right now is down 46. For subscribers, we were long. We got stopped out of our long position because of that rally and then a slight pullback. And then there was another rally towards the end of the day. But I'm maintaining now that unless the Dow closes sharply lower, below 25,800, my thinking here is that if there is now we're down 106, a sudden collapse in the market. Somebody must have said something. So I'm looking at this and I said to subscribers, at a certain level, we're going to go short the Dow because then it will say to me that this is not a G/B, but it's a G, it's an alternative count. The fact that the MACD and stochastic closed negative yesterday was important, but it was only slightly negative. The Dow is now down below the 9-period exponential moving average, the 14-period moving average, the black line right there in the daily. That's being tested. So we are now in the short side of the Dow, first time in a little while, and we're going to see whether or not at the close, and I'll explain why this is important, because this is the Friday close, the first weekly bar after August concluded. That was at leg E. That's going to make it a peak E in the weekly. But the MACD and stochastic at 91%, and the MACD very good. That's a nice sign. And the monthly chart's still very strong. So my contention is, and I'm going to do this right now, SPX.X, there was that down channel that it was holding. It's gone to the lower end of the down channel. This is the 1, 2, 3, 4, 5, 6th day of lower lows, and yet it's still pretty benign. We've used up a lot of time, a lot of points for a very short period, but not when you look at what happened on the way up. We haven't tested. Look, 1, 2, 3, 4 candles from the low that was made on the 23rd at 28.54. We went to 29.16.50 all-time high. And now, even with all the bad news this week, where the SMHs, the semiconductors tanked, the XLK tanked, the tech sector was very weak, we're looking at using a 1, 2, 3, 4, 5, 6 sessions, and we haven't taken out the low even of the 24th at 28.62. Right now, the low is 28.70. The day is young. We can see these waves of selling are really important. And it says to me that the S&P, I should have made a note of that and say, wait a minute, this S&P has made that peak D. That's what we were looking for. Perhaps we should start preparing. But I'm not sure I would have gone short at that particular point because the MACD and stochastic was still good. Now it is underneath the 14-period moving average for the second day. Got to look at it, and now I'm probably going to be putting it down arrow in a number of the indexes. So numbers to watch in the next week if the S&P isn't able to rally above 2,900, 2896 to 2,900, 2986 to 2,900. That's going to be very important. And if it takes out the low that is filled the gap, so now if it takes out the low that was made on the 24th of 2862, that's really very negative. So it's taken time to get to this point, not the speed that we usually have. Look at that big move down there when we made that peak, that alternate count top at 2848.03. Was that 28? Yeah, that big down candle on the 27th. Immediately followed by a big red candle. We haven't had those. It's been this has been a pretty orchestrated, well-orchestrated move down. It hasn't been one of those waterfall cascades yet. All right, so the numbers to watch I gave you. Go to the QQQ. Let's go to the QQQ. The QQQ is the NDX Invesco QQQ Trust Series, trading at 181.41. Absolutely try to rally, try to get to the 14-period moving average. Couldn't do that. It's now at 181.40, down 41 cents. 180.73 was the low yesterday. If we take that out today, that's going to be very negative. That doesn't make it an alternate count. In fact, already I'm going to say it's hardly likely that I can call this an alternate count. It is a continuation pattern, a peak F that was made, and that suggests to me that I got to put in an inverted caret, and that says that's that alternate sell signal that goes quickly to a sell mode. So we're in a sell mode in the QQQs daily. Weekly chart hasn't even given a sell signal. The MACD is good. Stochastic's at 88%. Yes, it's a peak E, and it went right into that band. You know, the Chapman Wave inside track repellent band, and now it's pulled back, and it's holding the 9-period moving average in the weekly chart. Parameters to watch: a close below 170. It's at 181.49. A close below 179, which suggests that there's going to be quite a bit further weakness to come, and it needs a move into the 183.50s to the 184.20s to really say, hey, maybe we just go sideways based on the weekly candle. IWM is the Russell 2000, 170.59, down 6 cents. It's exactly the same story. Alternate count, everything about it right now looks like it's probably a peak F, not an alternate count B, and we're looking at 170.62, down a penny, holding quite nicely. That weekly chart is still very strong at this point. Monthly chart is very good. It'll take a move into the low 169s. I'd say a close below 169 says, uh-oh, that weekly chart will be impacted. And it needs to push into the 172s to say, nah, just going sideways, rotational consolidation. Now we're going to go to gold as the break comes. Gold is down 2 at 1202.0, down 2.3. Wow, that gold chart, it just doesn't get a break. Look at the dollar. Dollar is in a trading band, but nice move up today. 95.33, up 30 cents. I'll be right back. Basil Chapman, Tiger Conditions Hour. Down 90. S&P's down 4.5. Down.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. A lot of questions came in during the break. Yeah, I'm going to try to answer them because I think they're really pertinent. Now that we know that there's a really good chance that the Dow has joined the other, you remember I was speaking earlier on in the week saying I don't like the fact that the general is leading the troops. It just doesn't work that way. You have to have everyone in sync. But you certainly saw how the Dow helped all those rallies in the indices as they were tanking and then try to rally back, and then they kept failing. So now it's the other way around. The core is dragging the soloists down, and we'll see exactly where that's going to go to. So I had a question about silver. I was going to get to silver, but I wanted to finish the dollar and gold before the break. Silver, the question is, isn't silver more interesting than gold, Basil? Okay. I'm going to say that the best is when you've got a just like you've got a unison decline in actually all the precious metals. It is interesting, but it's also used industrially, so a whole lot of things are going on. The fact that silver's not rallying, it's kind of important, but interesting only in the sense that sometimes it alternates. Sometimes on a daily basis, you'll have silver having a better chart pattern than gold, and sometimes the other way around. I'm putting them in the same category. Until the GDX, which is really the gold stocks, that's what you want to see, the gold stocks index trading at 17.72. This is called the Van Eck Vectors Gold Miners. We did have a small position in it way back on the 27th, way back just a week or so ago, with a really tight stop. We did get stopped out. The position was there because I needed to we have not changed our position in the dollar for the full position. We have not taken any profits at all. Normally, when the dollar was up at that 96, almost 97 level, I would say take something off. I'm experimenting in the sense that my longer term take, and this is going to be really put to the test, is that just as the yen back in the 1980s when Japan was coming on strong, you remember when America was sending over their CEOs or their top people in the different industries to Japan to study their fantastic ability to turn companies around and to make great companies like a Toyota, Honda, etc. And that was almost the exact top. That's when Japan bought, I think it was Rockefeller Center right at the top of that particular market. In 1990, I think it was the long weekend that January the 1st, that was the top of the Nikkei. What was it? 39,000, I can't, 37,000. I used to know the numbers so well. I haven't even mentioned them for so long. But anyway, that was the major top. I remember in my Chapman wave notation, that was when I was still hand charting. It was the end of my hand charting, and we've got that major top. Well, I'm looking at this and I'm saying, is there a chance, and I think yes, there is a big chance, that despite all the stuff, I had someone yesterday say to me, so when's the impeachment coming? You know, it's a really big step, impeachment, and it debilitates, as it is, this is all debilitating many aspects of the government. It's a big deal, impeachment. We know what happened with Clinton. We know what happened with Nixon. It's not only messy, but it is so debilitating in many ways. So I'm thinking that's just a sideshow. I'm thinking that the economy is a super tanker, and so much has been done that appears to be good for the economy right now, that we might see, just as the yen and Japan was skyrocketing to the 1990 top, the long weekend, New Year's Day weekend, in the Nikkei, I'm thinking that we are on the same course here, that the dollar is actually going to do very well. And my contention was back in 1986 and 87 when I wrote my paper. I think you can still see it on TFN if you go to the education section. It's a chapter from a book called The Psychology of Investing. I had a chapter 13, I think it was, an omen, called The Mega Bull Market Still to Come. That was published in 1989 or 90. And that was an article that I wrote with a partner at the time. Actually, I wrote the article. He added some of the stocks involved. And that was looking at a mega bull market still to come. That was including the 1987 crash. And I said 18 months later, there should be an all-time high, and that we're going to go to record highs. That whole scenario is playing out. It's playing out 40 years later, but it's very interesting because it is where I spoke about Cadillac once again becoming the premier company. Pink Cadillacs will be back. I don't want to get into that. All I'm saying is that I think that there's a chance that the American economy does become stronger and stronger, despite all the talk. But at the same time, we've got these dark clouds that keep coming over. Here it is, tariffs, bam. Talk about tariffs, another 200, what is it? What did it say? 267, another 267 billion being discussed as for China tariffs. Hey, these do have an impact. And I suspect that in the very end, it'll be a negative, but for a time, it will be a positive in the general market. So we've got to watch this closely. Meantime, I think isolation, I've spoken about this for decades. I said, when America becomes isolationist, it's never a good thing. I don't know why, but it's never a good thing. I think looking in is good, but becoming an isolationist is not always a good thing. So we'll see what happens. In the meantime, that's my contention that the dollar longer term should do very well based on the economy doing well. We'll see. Hey, that's going to be up for grabs in this big pullback phase that we're seeing right now. Meantime, back at the ranch, let's look at the TLT because that's actually down 80 cents at 119.36. So far, money is not flowing out of stock market, out of stocks and into the so-called safety of bonds. I suspect it will, but we're still, if you're looking at this H pattern in the TLT that goes to, here it is. Yeah, this H pattern, it's going to perhaps form another cup formation. We'll see. And I suspect if the Dow goes under 25,650, you will see bonds start to rally very strongly. Yields come down. Will the TNX trading at 29.28 right now? It's actually up 0.51. Will that turn around and break that low? And that's going to be the question. The low of 27.56 the week of the 1st of June. When it does that, I think that the market will start to accelerate lower. That's just kind of my thinking. All right, now let's get back to the IYT, which is the back to the market. IYT's transports up 35 cents, made a peak C1, C2, possibly even a C3 right now, testing in the weekly chart that peak D that was made in the rectangle formation. If the IYT, the iShares Dow Jones Transportation Average Index Fund, starts to trade at any point in the next 2 weeks, it's a 205. If it closes any day under 198, that impacts the weekly chart very negatively. So let's watch that one closely. The crude oil, just as we go out, crude oil right now is down, up, down 50 cents after making a peak E-top just over 71. It's trading 67.27. Basil Chapman, Tiger Technicians Hour, Dow's down 155, S&P's down 9. Dow's now much weaker. It's impacting those big industrial. I'll be back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, and it is with the Dow down 150, S&P down 9.5. This is going to be quite interesting. I was asked about the VIX index. It's up at 0.79 at 15.44. So this is the scenario that we've been talking about for a little while, the little U-shaped patterns in the VIX index weekly, saying every few weeks or 4 weeks or so, 5 weeks, there's a rally, a spike to the upside. Here's this weekly trend line that we're looking at. Broke it 3 weeks ago. We couldn't hold it, pull back. Today we're breaking it. It's Friday, so it should close above this trend line, which is the 200 period is at about 14.60. We're trading at 15.41 in the VIX index. This is exactly the scenario that starts what I call the bear phase to watch. Now, why do I say to watch? Because it's Friday, we don't know what the close is going to be. It's a 1536. But if on a weekly basis, and we've now had 3 weeks of testing that 200 period, sorry, 3 days of testing the 4 days of testing the 200 period moving average, it's just the last 2 days that we've gone quite nicely above it at 15.29. But that weekly chart, it's really important to close for the first time above that 200 period moving average, because it did it once before, and that was in June, the week of the 29th, hit 19.61, and then opened lower that following Monday, and then that was the high, and then it just kept going to the low of the week, underneath the 200 period moving average, under the 9 period moving average. So how brief is this? What I'm saying is, once you've got this headline cover, the cover story is most important, and that now is, what will tariffs do? It cannot work alone. It can't be a one-off thing. It has to be together with markets. Look at the FXI. The FXI is the China, this is the large cap China iShares ETF, 40.76. Now they've closed, but it's down 0.63 at the close today, which is actually tomorrow, their time. And what I'm looking at here is that weekly chart, I've been saying that 200 period moving average is going to be like a magnet, and if you go too far down, it becomes a repellent zone. You can't get above it. And at this point is a cushion, but we're under that cushion at 41.37. We're looking at the FXI at 40.77. And look at that monthly chart. I don't like it. I spoke about the EEM. That's this is a different aspect altogether. It is in China. This is the emerging markets. Where is it? 41.49, down 27 cents. Same kind of lousy monthly chart. Weekly chart looks very poor. Also, just on the 200 period moving average, I have to tell you, look, that 200 period moving average, remember I spent yesterday a little time on it. Look how it broke down back in July of 2015, went under it, couldn't get back until the whole period of October of 2016, goes back under it and only breaks out and treats it as support early in 2017, and then doesn't look back. You don't even have to look at this orange line here. It just, let me make it nice and thick just for demonstration purposes. Nice and thick, there it is. And lo and behold, we're testing it now. This is from about February of 2017. Here we are, September of 2018, and for the last 3 weeks, we've been coming and testing. The EEM is testing this, the FXI, testing it exactly the same. They look the same. So let's go to the TRCCI, the commodity index. This is a weekly chart. Look at that. It goes to a peak, D and E, just above the 200 period moving average without, remember this is Technical Friday, I want to get some technicals in here. So the 200 period moving average got crossed by the 9 and 14 period exponential moving average back in, let me get my pointer right there. Bam, it goes down. And that's July of 2014 in the commodity. This is the Thomson Reuters equal weighted commodity index. And it comes back again. It takes forever. Look, from 2014, it comes down significantly from the let's call it 530s. Now let's call it, 530s. And it comes down to the low of January of 2016 at 351. I would call that a pretty hefty pullback. And then it makes the lowercase h that goes to a lowercase m formation. So this is going to be very important because the stochastic in the weekly is finally turning up, not with much price movement, and the MACD is still very negative, but the histogram is just improving a little bit. So at 399 right now, it would take a move above 412 to really snap out of all the resistance from moving averages and start to make 431 the target again in the 200 period exponential moving average. The further away we move from it to the downside, the harder it is longer term to get there. So that's what we're looking at. I just want to quickly see if the dollar is updated a little bit. Yeah, so the dollar's up 33 cents at 45.36, and that's important. High-grade copper. So high-grade copper is down a little bit. It's in that arch formation that's being retested to maybe make an M. That looks the same as the commodity index. I want to look at wood, which is the iShares Global Timber Forestry ETF, held very well, down just 10 cents at 77.66, but it's made a peak F-top in the weekly chart way back there at 83.88. Goes down to 74, now it's at 77.66. That monthly chart suggests that there's an arch formation, a lowercase h, and that at some point from 77.66, we could be testing the 73s in September or early October. So, okay, HGX, I want you to look at that. This is what I'll show my subscribers this weekend when I send out my charts for Monday. Start sending them out Saturday morning. HGX is the copper, down 3. Oh my, at 299.50. That weekly chart, peak G, unusual peak G, pulls back very sharply, and look at it. Just making lower lows, can't hold above the 9 or 14 period exponential moving average in the weekly, and the monthly chart doesn't look too good. Watching this closely, and that's so interesting. Why? Because Home Depot, which I just had a terrible experience with, ordered some doors and they came the wrong size. 205.90, up 1 penny. So that's looking at the housing, not the housing buying and selling of houses. More, this is repair work. When you drive around, I'm sure almost most cities and towns in the United States, I'm sure it's getting harder and harder to get anyone to do work, carpenter, electrician, plumber, and prices are really high. So a lot of people are doing it themselves. Leg C in the, calling it leg C for now, in the daily chart. So that's going to be very important. Questions about Ford. You know, earlier on in the day, I was looking, I thought, I wonder, with all this news going on, how Ford and General Motors are being impacted. Ford at 9.30, down 13 cents. This is on a monthly basis. You made your major peak at 18.12, July of 2014, and it's just been lower lows and lower highs, and seldom have we been able to close above either the 9 or the 14 period moving average for very long, and it goes to lower lows. There's a left side, right side price time match that I drew in ages ago, and that says this month there could be a test of the 8.82 low that was made way back, I think it was July of 2012. Can you believe it, with markets making all-time highs just recently, and the auto industry, and it doesn't look good. I'll be right back. Basil Chapman, Tiger Technicians out.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I was asked about SSYS, which is, there we go, a 3D company. I actually like 3D, DDD, much better than SSYS. SSYS was taken over by an American company. 3D Systems not. SSYS was an Israeli company, is an Israeli company, still working with them. And so I prefer the chart of DDD, 3Ds. And I missed an entry because of the gap up, and just thought I couldn't follow the gap up. It was close to the 200-period moving average in the weekly, and anyway, it's gone above it. Now it's coming back. It's at 18.68. Just remind me again to have a look at DDD at 16s for subscribers. That's where I think it'll become more interesting. I don't want to do anything right now. SSYS, which is Strata Systems, I believe. Yeah, made a peak F top in the daily at about 26, trading right now 23. Weekly chart, peak D, pull back at 23.20. I'll look at it in the 21s, maybe 20. But I think I like DDD better as a company and both as a chart pattern. So I'm just nothing there. In fact, our long positions, this is the lightest we've been on the long side for a long time. No more Goldman Sachs. That was a very brief flirtation with Goldman Sachs. It was really a test. I said to subscribers, we're just doing a little test here to see whether there's strength, because at some point Goldman Sachs will be a winner. I just don't think it's right now, but it was acting reasonably okay. I'm not interested trading now at 232. See Goldman Sachs. Yeah, 232. We took a 1% loss on a $232 stock. 238 at the time. It was just more an experiment. You see, this becomes an alternate count. I have no choice. That was not a B, although the technicals were good right up until that moment. They turned down very sharply. So that's really an F, and that's one of those. So I get asked every once in a while, oh, wait, in the Chapman Wave methodology, how do you know you're wrong? Well, there are times where it's easy because you're going from the low bar to a peak D. When you get to D, other things can happen. And it's the other things that make it a lot more challenging. But then you use your techniques and your discipline. I mean, 1% loss on a $238 stock. That was, as an experiment, was a small position. I don't feel bad about that. I don't like it, but it's, it's part of getting to know your sectors and getting to know your stocks better. That's just the way it is. So, and we'll be out for a little while now, I'm sure. So that's a question about Intel. Yeah, this is a good question about the semiconductors. I had 2 questions about the semis. Intel's making the arch formation. This is the second one, and this is a smaller one. And this has gone down to a trough C in the weekly chart, peak E, a major turnaround from the peak E top in the monthly chart. I suspect Intel, I suspect all the semiconductors are going to be up against a lot of pressure here, because if I look at the, we have no position right now. It was my mistake. I knew exactly what what this particular, the technical Friday, yeah, I'm going to go through this. You see the weekly chart, there's a Chapman wave inside track repellent zone, right? It gets to that level and then it reverses down sharply. The daily made a peak E top and then pulled back sharply, didn't take at the 100.90 level on the 2nd of July that started the move to the upside. But really what happened was it went to a peak E at 109.36 on the 8th of August, and then it gapped down, pulled very back down sharply below the 200-period moving average, went to 101.38, the low of the 17th of August. And then what we did is we saw the SMHs reverse sharply and come back up and make a new recovery high. Not an all-time 112 round number all-time high, not all-time, so peak E high on the 7th of June, the all-time high was 114.55, and it's still in the oval pattern. And what I'd said was, it went to peak A and peak B. I called it a gray A and a gray B, but it looked to me like there was just a chance we could make it maybe a C, but once it's under the previous high, it can reverse at any time. Then there's a pattern I've spoken about for years. For people who know my work, I call it the double. It's the double camel hump. What you're looking at is, there's some camels that have two humps. The MACD, or the stochastic, pulls back sharply, but very quickly there's another rally. This is the rally that occurred in October of 2009 in the weekly chart of the Dow. The reason why I was able to say when we made the top that it was going to be probably a pretty serious top. And one of the reasons is you get this peak A, F/A, G/B. And as long as the stochastic holds steady, which it was, it looked really good right up until 3 days ago. I look at it and I say, if the stochastic holds steady, that's good. If within 5 sessions, the stochastic suddenly goes under 80%, that's really not good action. So what happens is, there was bad news, I don't remember which stock it was, and yesterday, the semiconductors just tanked, all right? Was it MU? Micron, well, whatever it was. So it tanks, and then today follows through to the downside, and the MACD is still positive, barely, but still positive, and the stochastic still barely positive at 81%. And I have to look at this and I have to say, was that an aberration? Was that something very serious? Is this the second arch formation, like an M? Or is it really a kickoff to another move to the upside? Well, for a while now, I've been saying that I think that the semiconductors have made a serious top, and that there was a chance that we were looking at all that talk about the semiconductors with applied materials. And earlier in the year, I said that they're talking very bullish about next year. My friend, who's in the semiconductor business, said, he doesn't see it. I don't use him for any inside information, anything like that. It's just, whenever he talks about it, I just listen. And he said, these guys are talking about next year. This is at the end of last year. He was saying, I don't see that happening this coming year for 2018. I'm a little cautious, and I keep getting asked by my company. He was taken over, and he now works for the new company, bought out, that is. I keep saying to them, I think that next year is not going to look as good as this last year. You're extrapolating from the data, but I've been in the business long enough to know that that's more an aberration. I don't know, but this is what I think. And I think we're starting to see that unfold, that the semiconductor index is going through this digestive phase, and that oval pattern can last a lot longer than your patience. And I'm looking at this and I'm saying, let's see what happens. We haven't got a position yet. I do think that the short side is probably the side to be on, at least for now, because it got repelled on a weekly basis from the Chapman wave inside track repellent zone. It's under the 9-period moving average, but just on the 14-period weekly moving average. MACD is still down, stochastic still low. I think so. The answer to your question, yes, Intel, I think, has got a problem. I think that if you're looking at applied materials, AMAT, look at that, major top, peak E, Oh, I didn't even put the high in. It was at 62.40 back in March of this year, and we're trading right now 39.90. I'd say that's a problem. And Applied Materials is one of the great ones. LRCX, one of the great semiconductor companies. Monthly chart says, hey, we're in for quite a bit of a rest, trading at 159 after the 237-ish all-time high. I'll be right back. Basil Chapman, Dow's down 130.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I had a question to Dan. S&P asked Basil, can you look at SQ? And yes, I get your newsletter. Thank you, S&P. So we went long yesterday. I've loved Square forever, but it just kept going up. I just didn't want to dive in. Yesterday, because of that very sharp pullback, I decided we're going to go in, we're going to buy it under 88. Lo and behold, it pops up, and then it comes down under 88. We get in. And I still wanted just a 1% risk, 88 cents. Why? Because if it started to close at the low end of the range with the NDX still very weak, you're in trouble if it gaps down the next day. Just risk reward. That's all I was looking at. Well, we got stopped out. I was going to dive right back in today, and I thought, you know what? Let's get. I don't want to do that. I just want to see what happens. Well, it only went a little bit lower today. It went to SQ, Square Inc., point of sale software, managing receipts. I love this. Everywhere you go, if you see a person who slides your credit card, a vendor, outdoor vendor, and they use it, ask them what they use. And Square, a lot of people use Square. So it goes to 86.55 this morning, trading right now 90.41, having hit 91.45. I love the action. I do think it's a little toppy regardless, but out of all the stocks, if a stock holds well under these conditions, fund managers are going to grab it, and that's what they're kind of doing right now. They have extreme, yep, it's a beast. I think it's absolutely a beast. I'm sorry we didn't get back in. I just, what can I say? I don't want to go, but that would have been the right thing. Give it a second chance because it acted so well yesterday. Squares is really a fantastic stock. How much higher? Who's to say? But I think looking out, it's really a monster. So quickly, before you go to Steve Rose and you go to Dave White and you go to Tom O'Brien, let me just say my opening calls, my daily newsletter. I'll be sending my newsletter out starting tomorrow morning for Monday. I like to get a start. We get a lot of charts out. We look at different things. We're in a heavy cash position. We're looking for bargains on the downside. Now I'm going to have a lot of patience for the ones that we've loved, missed, like to get in at much lower prices. At the same time, we might start adding, we've already added a short, we might start adding more shorts, but I'm not sure whether or not we've made a chunk of the move down just for this period, and that there could be a little bit of a rally next week, because if we do rally from the NDX and the S&P, you might find we start to go more sideways with sudden news-related drops, stair-step move down. But that's what we need to watch. And I'll be back on Monday. Have a great day. Stay
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.